What's going on YouTube? My name is Tyler with the Dividend Stock King with another video. And today's video will talk about an exit strategy for the stock market or buying stocks. You get an exit strategy. Before I begin, I am not giving financial advice. I am not a financial advisor. Please hire and seek one for your financial needs. Don't listen to me. I am not an expert. I am an expert on the stock market. I'm an expert on anything. Do your own research. Now, before I also begin this video, head over to Legendary Marketer. I have a link below the box here to build an online business. Hey, look, we love passive income. We love investments. We love businesses. But in today's world, we're all working one or two jobs. We have a family, kids, and we don't have time to start an outside business or do a second job. But start an online business from home. Okay, I have an online business that's super duper passive. I have dividend investing stocks that's super duper passive. And online business can help you diversify your income. This course is $7 one-time fee, and also come with a business coach. They have a 2-call with you on Zoom to talk about your experience with affiliate marketing and come on a plan tailor-made for you. Now, this video talking about exit strategy, exit plan. Now, every share, every stock that you have, you should not get emotionally attached to it. Okay, you should have an exit strategy because things in the stock market could go south really quickly. You need a plan of attack. You need a plan. So I'll give you a prime example of something what I'm talking about. This stock here, I did a video about this as well. This stock here, when it first came out, this is a cannabis company of packaged goods. Hexo was $30 when it came onto the market and was going up. Looked pretty promising, but that's same month it was just dropping down. Now I don't know why it was dropping down. I don't know why, but I didn't do research on it, but it went down. So you need an exit strategy and an enter strategy. There's something like this. If I caught this stock, and I wouldn't bought this stock at $30 at the highest point. If I caught this stock at $2.75 or $1.96, I would have bought it because it's only how far can it go down? It can go down 96 cents, but I'm on down $1. Something like this, I will have entered in just to buy and hold until it gets up in price and sell it. So at right today we're $5.82, so you be up almost $4 every share, which ain't too bad. But you need an exit strategy. Okay, exit strategy. So if, give you a prime example, go to my portfolio. Let's look at Armored REIT. All right, let's look at this real quickly. Once it loads up, because Robinhood is terrible with with this. But this pays, I'm going to go through it. Our AR is a REIT that you can invest in. It pays a monthly dividend of 10 cents per share. It pays 10 cents per share. Okay, now, before the whole pandemic last year, it was paying 17 cents a share, and it cut the dividend to 9 cents a share. And I believe June of 2020, they raised it back to 10 cents. Now they pay 10 cents a share. Okay, so I'm a dividend investor. I like getting dividends. So my total return as of today is $120, 3%. Okay, I have about 318 shares, and I have a dividend payment coming up of $31. I like that. I like the dividend payment. They pay every month. So what happens if they cut their dividend to 5 cents? Or let's just say they decided not to pay dividend anymore, which would be pretty hard because they're a REIT and they're required to pay 90%, believe, of their profits to shareholders. They get a tax exemption. I'm not 100% sure, but I think that's what the basis of it is. If this thing start paying a dividend, okay, what I would do, if let's say $31 the last dividend payment I would get. Let's say the company decided we're paying no more dividends, we're done paying dividends. I would sell and make $120. I would sell it and decided to stop paying dividend today. I will sell all of my shares and make $121. Okay, I will sell it. I will sell it and take get my money back plus $120 and take that money into a new investment. That is my exit strategy. Okay, I'm a dividend investor. I want dividends. And if they decide to cut the dividend, let's say it go from 10 cent to 6 cent, right? I'll hang on to it for a while. I will go to the website, look at articles online, and see why they cut the dividend, how long will it be cut, and make a determination. Look, what will I do? Will I keep? It depends on, it's hard to say. It is hard to say. I'll probably keep it because I like the stock and it pays monthly. But if I do the 6 cent, I'd be kind of disappointed. I will buy no more shares in it because it cut the price, the dividend. But this is why you diversify your portfolio. This is why you put all your eggs in one basket. This is why you don't buy 1,000 shares of this and 1-2 shares of something else. Because the dividend in half your money is gone. And just because they look at my portfolio, if they cut the dividend, say in half, so $31, I get $15. That's fine because I'm getting $12 from Archer. I'm getting, I believe, $15 from QLD. I'm getting $10 from here, $10 from here. My other stocks are still getting dividends. So I'm trying to keep everything equal. But ARR goal, I'm trying to get to 500 shares, be $50 a month, and my goal is to get 1,000 shares. But after 1,000 shares, I'm gonna stop buying stocks. I'm gonna stop buying that company because you don't want to put all your eggs in one basket. So my goal now is to get to 500 shares. I'm gonna ride it out for a while, take the $50 and buy more different stocks. But I'm gonna ride it out and see how good it does. And I might go in and get another 500 shares, get 1,000. That'll pay me $100 a month. Could pay 10 cents a month. And after the 1,000 shares, that $100 a month, I'm not buying no more shares of that company. I'm gonna keep the 1,000 shares, take that $100 and buy different stocks because I don't put all my eggs in one basket or have like 75% of my money come from one stock. I don't want that. I want different stocks paying me. So that's paying me 25, that's paying me 10, that's paying me 15, that's paying me 35, that's paying me 50. I want different numbers because if one takes a hit, the other one is still going to, it's like an ETF, the other one's going to balance it out. So exit strategy, what are you going to do if the dividend gets cut today? What are you planning to do if they decide to do something crazy and people start selling off shares? If, say AT&T, for example, to cut their dividend, I sold some shares because AT&T had a purpose, but let's say if Armor REIT decide to sell off some of their company to a different company. As long as they pay a dividend, I'll stick with it. I might even buy the dip if they continue to pay a dividend. And a lot of people will probably do the same thing. But if they decide to stop paying a dividend forever, I would sell. I'll take my, because that price is going to drop. That price is going to drop and you're missing out. So soon I'll sell my shares and put it somewhere else. So that's what I would do. The money's in the company. That's what I would do. So have an exit strategy. Okay, AMC is a prime example. I bought it for 250 cents. I sold it for $45. Have an exit strategy. Okay, have an exit strategy to take profit. The goal is to sell, take profits, take that profit, and invest it somewhere else. That's the main goal, not to lose money. If you're negative money right now in a stock and you negative $10, $20, ride it out. You don't have a choice. I give you a prime example of a Workhorse. Like a Workhorse would be a good example of that. I have one share of Workhorse. I'm down, I believe, $10 in Workhorse. So it would make no sense to me to sell. So I had to ride it out. Yeah, I'm down $10 and 91 cents. Yeah, 91 cents. I'm down 43%. I have to ride it out. I can't sell. I gotta ride it out. I have to ride this thing out. I have to ride it out to the bitter end and see what happens. And if they go up and they say they got some bad press and the price go down, sell. You want, if you need to, but have the exit strategy. Don't get emotionally attached to these stocks. If you're losing money, but you want to get rid of it. No. Don't be emotionally attached to these stocks. If Armor REIT decided to stop the dividend, I would sell all those shares off and put them in QLD or some more ETFs or Main Street Capital or something like that, so the money can keep coming in. So that's what I would do. So have the exit strategy. You buy these stocks and pay dividends, or what's your goal? Goal is to hold it for how long? How long are you going to hold it for? Okay, if something go wrong with the stock, what are you going to do? You're going to hold on to it for the long term? You're going to sell, take profit? What you going to do? You going to sell it or hold it? What you going to do? And if you do sell it, are you going to take the money and put in your pocket? Or are you going to buy a different stock? What you going to do? You got to have a strategy. Have an exit strategy. So my name is Ty for my blog, SKing.com. Please subscribe to the channel, like the video, share the video, and see you next time.